I've been equating to Bittensor to the early days of the internet.
It's pretty wild the speed at which you had these Gen AI platforms adopted from a mass consumer perspective.
I think that this has the potential to be as transformative as Bitcoin. All of these teams are trying to build businesses, deliver products and services via their subnets, but at the end of the day, all roads kind of lead back to Tau.
Everyone's feeling so much pain unless you're a company in spot Bitcoin, especially our friends in the Ethereum ecosystem, which has just been quite brutal. We pour one out for their souls. Thanks for tuning into The Scoop. I'm your host, Frank Chaparro, and I'm very thrilled to be in studio today with Barry Silbert, the CEO and founder of DCG. Thanks for coming in.
We're finally doing this.
I know.
For crypto and DeFi professionals looking to contribute to a team committed to innovation in digital assets, Fidelity Investments is now hiring. Why Fidelity? For starters, they've been exploring Bitcoin and blockchain since 2014. They were the first traditional asset manager to launch a native crypto business and among the first to launch a Bitcoin exchange-traded product. Innovation is in their DNA. Fidelity invests in their talents by supporting and developing associates through continued education opportunities, casual crypto-focused discussion groups, and on-the-job experience of working with new technologies. If you want to work on cutting-edge products and explore the new frontier of DeFi and blockchain, Fidelity is for you. Their products continue to improve and evolve, staying ahead of this rapidly changing digital asset landscape. So go ahead, explore Fidelity Crypto Careers today by going to crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer.
Well, you've been on a bit of a tour relative to, the past 10 years of you building in crypto. You kind of have been relatively quiet since that infamous Wall Street Journal article of you kind of with the red pen and that, you know what I'm talking about?
Yes. Well, that was from the second market days.
Oh, that's right.
Yeah.
So that was even
I did
pre.
it before Craig Wright made it cool. Yeah.
That was super. One of my favorite photos of crypto memery. I wouldn't say one of my favorite photos of you. It's not like I have a ranking of favorite Barry Silbert photos.
Yeah. And to set the record straight, it's not like I sat around in my office drawing, shit on Windows. It was like somebody else drew it and they're like, hey, why don't you kind of pretend to be writing? And that's followed me for that was probably 15 years ago.
So let's walk through the history for people who are maybe unfamiliar, right? Because Second Market was more of it was acquired by NASDAQ, right?
Right.
As a sort of place where you could sell private shares in early stage companies. So how did you get from that to then Bitcoin?
Yeah.
Vis-a-vis Second Market.
So I was a banker for a number of years, and then I always wanted to build something, and so I had this idea for creating like a secondary market for private stock, and this was like 2004, and so we launched this market when the credit crisis hit in '08, the IPO market. I don't know if you can remember, it shut down. There was no IPOs. And you saw a bunch of great companies get formed, like Facebook and Twitter. And so we created this marketplace for this illiquid stuff. And it was kind of right place, right time, and raise money from some great folks. And then I heard about Bitcoin in 2011. When did you hear about Bitcoin? When was your
2016?
Oh, okay.
Yeah,
You're
so
right. Yes.
relatively late compared to you, but
Yeah. So I heard about it. And I was like, this is interesting, but it's not going to work. And I was kind of like, I experienced a credit crisis kind of firsthand, and I was absolutely convinced that we were not through kind of the worst of it. And so I was trying to find investments that would perform well when kind of JP Morgan went out of business. Like I was in that kind of mentality. And so I got really into kind of gold. I never invested, but I was like, all right, well, gold's kind of the thing. And then I heard about Bitcoin, and I was a total skeptic, and I was like, this is not going to work. But I kept on coming back to it, and the price at the time I think was maybe around $1 or $2, and it ran to $10, and I was like, oh crap, I missed it. And then it fell back down to $5. I was like, you know what? I was like, I think this has the potential to kind of be the biggest thing, and I knew I would forever regret it if I didn't do something. So I started buying Bitcoin on Mt. Gox and did it, small, and didn't tell my wife. and then
Smart.
oh yeah, she didn't love it until made a few bucks, but she was like, she was like, what is this? So I started buying it, and then Bitcoin, you get bit by the bug,
Yeah.
and I was like, this is something that I want to dedicate a lot of time towards. So I was still running second market, and so I started doing some angel investments in like the first generation of kind of infrastructure companies, like Coinbase and kind of Circle and companies like that. And eventually, I convinced my board at Second Market that we should do something in the crypto space, and they were like, "What's Bitcoin? What's crypto?" And I got them bit by the bug, and we ended up launching the Bitcoin Trust, which is what actually became the Grayscale Bitcoin Trust. And so we launched that, and the idea was we were going to use this second market platform to go raise money, and we were going to use the second market platform to go to create liquidity in those
Hmm.
shares. And we launched it, and this was 2013, and we were, I think, probably the reason why Bitcoin went from like $100 to $1,000. We just were buying a ton of Bitcoin to put into the trust, and that ended up resulting us creating a trading desk, which became Genesis. And then, so I guess like fast forward to 2014, I said to the board, I just think that this Bitcoin thing is going to be really big, and so why don't we kind of go more in on it, and look, why don't we spin out second market, and then I'll go in all in on Bitcoin. And Nasdaq called and said we want to buy second market, and I was like, great, you can have second market, and then we just rolled it all into the Bitcoin businesses.
And it sort of served as like the foundation of crypto's nascent capital markets for, I mean, about a decade or so. It's interesting that you're coming on the program this week, given that we're kind of seeing this decoupling narrative come to fruition with Bitcoin outperforming the S&P and kind of tracking gold. And when I think about the DCG family, one of my favorite favorite memories of the Hasleon days of 2021, I think it was 2021, were the commercials that you guys did on Drop Gold.
Yeah, I think it was actually even
Was it
earlier.
2020? Was it
Yeah,
COVID?
it
Pre-COVID?
was. I think it was even before that. I think it was kind of like 2017, 18, 19. Because look, I think in the early days of Bitcoin, you ask people what Bitcoin is, and they would tell you, they say, "Hey, it's digital money." They would say it's kind of store of value, digital gold. They would say it's a ledger for this or that. And the one that was most easy to understand was kind of the gold analogy. And so I was the CEO of Grayscale at the time, and we were like, well, let's put together an ad campaign that's going to generate a bunch of buzz, and let's go piss off all of the gold bugs and have them engage and fight us and tell us we're
How
idiots.
ridiculous we are.
Yeah, and so we put together this I think we have maybe I think we did about 3 commercials, highlighting kind of the differences or the benefits of Bitcoin over gold, and it was a hit. I mean, the gold bugs hated it. I think Bitcoin was probably a few $1,000 at the time, and but I do think that Bitcoin has now kind of established itself as kind of the digital gold kind of use case is, I think, kind of the main use case for Bitcoin right now.
Hmm. Yeah, I think that's right. And I'm curious, like throughout these cycles, Bitcoin's narrative has shifted and changed. But it seems like digital gold is kind of has solidified.
In the early days, we definitely wanted it to be used as money. So there was a lot of efforts early on to kind of make it more of like a medium of exchange, and that unfortunately didn't happen. Most people didn't want to, they didn't want to pay taxes on transferring Bitcoin to buying stuff. They didn't want to. The volatility didn't lend itself very well to kind of using it as money. Look, that's fine, but it had to, in order for it to one day be money, if it ever is going to be money, it has to be a store of value first, and then it could be a medium of exchange. I think with especially with kind of stable coins, I don't think that Bitcoin is going to be used as money, but it's possible.
One thing that's super important for crypto adoption and Bitcoin's adoption and stability are robust capital markets. I was speaking with someone who's relatively close to you, but they said that the 2008 crisis kind of played a fund fundamental role in your like thinking and your approach as like an investor. And they said something to the effect of, a lot of companies, if when they prepare for the bad times, they think, well, we can just call up investors and get them in at a discounted valuation. And your thinking was more so of the effect of you're not going to get the call. like when times are really bad, like there's no call. And so that crisis played, feel like sits in the back of your mind. And then in 2022-ish, we had crypto's own version of like a credit crisis. That's what I've called. A lot of people don't really refer to it as
But
a
it was, it
credit
was,
crisis, but it
it was,
was.
yeah.
And so, and then now we're in a different sort of market. But how do you juxtapose? How do you think about the 2008 credit crisis in financial markets, and then the credit crisis that crypto experienced?
Well,
And
I'll never forget in the 2008 timeframe, people were legitimately worried about the financial system, like stopping, like not working anymore.
mm,
Like there were people were worried about actually being able to get money out of your ATM machine.
yeah,
I mean, we even, we got to the point where we were actually like, why don't we take all of our money out? This was for second market, and why don't we put it in a safe and go hire a security guard? Like that's how scary things
yeah,
were, and people, unless you live through it, you just don't appreciate that. And watching Bear Stearns, and some of the other kind of large kind of banks kind of go under, you have an appreciation that even the best run, most well intentioned kind of companies, when the shit hits the fan, no one's kind of safe. And it was only because of, I think, the government's involvement or bailout that these banks kind of survived. So approaching kind of 22, we as a company, I mean, we saw. I mean, the bubble was clear in kind of 21. We were preparing for the winter at the end of 21, going into 22. We didn't see a Three Arrows thing happening. We didn't see an FTX thing happening, and I think we survived through it because I had that experience in kind of 2008 to know, okay, you need to be diversified, you need to kind of stay out of leverage, you need to be kind of just monetize your investments when they're kind of doing really well. Um, and I think kind of going forward, I think that experience has further informed our kind of go forward strategy as it relates to, okay, the interconnectiveness, and you kind of refer to 2022 as a credit crisis. It was a unwind
yeah,
of, I mean, it was kind of creditor. I mean, there was this daisy chain.
sure.
And I even talked about it, frankly, even before it all happened. There was this daisy chain that you started seeing the links kind of get broken. And once a link gets broken at kind of the higher level, everybody downstream gets impacted.
Was there any way that, obviously a lot of these crises in hindsight, you can kind of identify what the cracks were in the plumbing. Um, when you think back, was it really just an issue of collateral, right? Was sort of the way in which crypto market participants thought about what robust collateral is wrong. And even when I think about it, like a lot of people talk about how there were all these under collateralized loans, but it was really more so that they were collateralized until they weren't because price went down.
Right, right. Well, I think it was the interconnectedness of across the entire credit system. So there you had counterparty risk that you didn't know that you had. And so when prices move very quickly and you started having kind of forced liquidations, you saw kind of just the kind of the and this is, look, this is not unique to crypto. I mean, this
Yeah.
happens across, in Wall Street all the time. And it's the classic example of kind of, over leverage and, kind of some kind of event that kind of triggers kind of a mass kind of unwind. And so, crypto really is kind of no different. And so, I think the obvious signs were, you saw the complacency, you saw kind of the lax kind of underwriting standards, you saw kind of the kind of the over leverage that exists in the system. And I think fortunately today, certainly in the kind of crypto space, there is some leverage, but it's nothing like it was before. There is a bit of complacency, but I think this year's kind of drawdown in prices, I think kind of I think brought some reality.
Well, I think it's a bit of a tailwind as well when you think about the fact that we are at, let's call it 90K Bitcoin without sort of the propping up of all of this leverage, right? I mean, there is obviously offshore, leverage, product leverage that exists in the market, but not to the same extent where you have, basically Peter borrowing from Paul to then use that to borrow from John.
Yeah, which presumably that's why I think Bitcoin in previous cycles where it would be impacted by downturns in the tech market, I think that's why you didn't see kind of the 50% kind of drawdown, this year. I think because you didn't see all that leverage, and I think there's the kind of the pools of capital that are now investing in Bitcoin. They're looking at it as a portfolio diversifier now. They're not looking at it as kind of a speculative kind of trading asset.
That's pretty fair. And I feel like at some point, I mean, we've been so accustomed to these bear bull, we call them winters. But I feel like we're getting to a point, and hopefully this isn't hopium. And I know you're quite a skeptic about a lot of things, that's got to break, at least for Bitcoin specifically, because of it's reached a like escape level, escape velocity, as it were, where you're not going to see, I think, in Bitcoin, a 70% drawdown.
I think you have to separate, and you have to separate Bitcoin from everything else, and Bitcoin as it is being viewed as kind of a diversifier from a portfolio allocation perspective. There's a very strong bid under Bitcoin
Hmm.
that as portfolios grow, as it becomes more accessible, as it becomes more legitimate as a portfolio diversifier, you will see a lot of money kind of flow into Bitcoin, and that's going to create a floor, a bid that will continue to go up over time, which is great for Bitcoin. But you have to think about where that bid is coming from. Um, if it's coming from um, sovereign wealth funds, if it's coming from large institutional investors, if it's coming from governments, the question is, at what point in time does that bid ever go away? And does that bid kind of turn into an offer, a sale? And I think what's interesting about Bitcoin as a portfolio diversifier is, I mean, look, Bitcoin was created as kind of a anti sovereign wealth fund, government, institutional kind of portfolio diversifier. And so the question is, at what point in time do they start puking up? Are they forced to puke up Bitcoin? Are they forced to stop buying, either because they lose faith and confidence in the asset, or because they have to? And but I think that's hopefully way down the road, where you have forced sellers of Bitcoin. But with the macro situation and the weakness around the world from an economic perspective and rates, you can't rule out the possibility that there will be an event in the future that would result in those holders
And
getting out of it.
what you said, before we turn the mics back on, that was super interesting, was the underpinning factor or catalyst for these major drawdowns have been when trust sort of is sucked out of the system, which is ironic given that this is a technology that was invented to sort of remove the need for trust.
Yeah. I mean, the whole cypherpunk movement was around the use of cryptography and privacy tools to kind of make for societal and economic change. And so and look, I think that's why certainly from an investing perspective, we have a lot of exposure to Bitcoin. I think Bitcoin is a great investment, great asset for diversify your portfolio, but it's also why I'm really excited about a number of other things that have kind of emerged, that I think are maybe either more in line with kind of the cypherpunk ethos, or I just think address kind of a different, larger addressable market.
I think that the investments you guys are making around Bittensor and Tau via Yuma is a good example of that. We talked about it when the new subsidiary launched, kind of the parallels that you see between its origin story with Bitcoin's, kind of the comparison, at least in terms of like the number of like tokens that will be issued over the course of
Have you
its
dug into it,
life
the Tensor?
cycle.
Have you looked at it yet?
It just listed on Coinbase, I
Yeah.
think it did.
Yeah.
So walk us through like the come to Jesus moment with Bittensor. What sort of got you excited about it?
It for me, it was just like Bitcoin. We had some folks on my team, on my investing team, got excited about it pretty early on. We've invested in, or we 50, 100 different crypto assets. And this was just one of them. And I didn't really pay attention to it early on. I didn't really get to know the community early on. And similar to Bitcoin, I started digging in and I understood the ambition, the idea of kind of this decentralized AI, this
Mhm.
world wide web of AI concept. It really resonated with me. But I was, not dismissive, but I was like, all right, well, like there's 50 of these projects out there. Why
Yeah.
is this one going to be any better? And so I spent 6 months just really kind of digging in and my team, kind of getting me excited about it and starting to meet the people in kind of the ecosystem. And I came to the conclusion, just like with Bitcoin, I think that this has the potential to be as transformative as Bitcoin. And I will regret it if I don't do something. And so the something for us was we launched a new business called Yuma, and I put my CEO hat back on. And while I'm still running DCG, I'm the CEO of this build business Yuma, which is essentially trying to do with Bittensor what DCG did with Bitcoin.
Mm. So what does that playbook look like?
It's a uh, let's help support the build out of the ecosystem, the infrastructure. Let's invest in entrepreneurs that are building in the space and building on top of it. Let's create awareness. Let's help educate. And I think what we do best is we make it accessible. And so Grayscale launched a Bitensor Trust. We are educating our network of investors as to why Bitensor is an interesting thing for them to look at, and we are going to help investors identify what are the great projects within Bitensor for them to invest in. And there's the evolution of Bittensors is now this concept of subnets, and
Yeah.
subnets are essentially applications that are kind of utilizing the Bittensor infrastructure to incent competitions, mainly AI related competitions. So each one of these subnets now have tokens. So it's kind of a very it's a very interesting ecosystem where each subnet has its own token, but it is all kind of denominated in tau. So all of these teams are trying to build businesses, deliver products and services via their subnets. But at the end of the day, kind of all roads kind of lead back to tau. So for Yuma, we want to make that
It's like the undergirding sort of platform.
it is. It's a market-based incentive system that incents the creation and commoditization or of intelligence. And so Bitensor is kind of it's a platform. It's not you're not using the Bitensor token itself to kind of to for pre-trading or
Mhm.
for inference. You're using the things that are built on top of Bitensor. Hopefully you won't even know, frankly, that it's even built on top of Potenza
Yeah.
or that there's even a token involved in it.
Yeah. And when you think about the problems that it solves for artificial intelligence, or rather when we sort of zoom out and think about how people think crypto can ameliorate or ameliorate some of the issues that AI has, it's really about validation and sort of verifying that something is either has provenance somewhere or is factually accurate.
It's the ethos of crypto. It's permissionless, it's global, it's decentralized. You kind of eliminate the risks associated with having these large gatekeepers, these large tech companies who are kind of deciding kind of what is the data that is being trained on or the output. You're essentially kind of letting the wisdom of crowds,
Sure.
and you're doing it in a way where it's accessible. And I've been equating to Bitensor to the early days of the internet, where first wanted to when you first access the internet, you weren't going to a website, you were going to America Online, you were going to
Yeah.
CompuServe, you were going to Prodigy, and those companies were delivering to you kind of the information that was accessible via the internet. And so, when I was on Prodigy, it was like super cool to see the weather or to see stock prices. And then in like 1995, 96, Mosaic launched the browser. And all of a sudden people realized, oh, wow, like I don't need to go through Prodigy or America Online to access the internet. I can go directly to what ultimately became weather.com or became Yahoo Finance. And that was this Cambrian explosion of innovation that only was made possible by the opening up of the internet. And so I look at Bitensor in kind of through a similar lens where today, you've got ChatGPT and you've got Claude, you've had, kind of these businesses that are building these entry points. But I would rather see there be 100 or thousands of competitors to those big companies, and Bitensor enables that.
It's pretty wild the speed at which you had these Gen AI platforms adopted from a mass consumer perspective. I feel like being in the crypto industry, it's hard not to be envious of that consumer adoption, given we've kind of floundered at seeing consumer apps in our space take off.
And it's fun in the potential space. It's a really interesting community because it's not a crypto community. It's an AI first, tech first community that is using crypto as an incentive mechanism to incent the crowd to compete to solve very big problems. And that's cool. I mean, having been in crypto for, I guess 14 years now, um, it's not about number go up. Like, obviously, people understand that the way that they're going to pay the bills and hire staff is if the value of this kind of goes up. But it's a very mission driven kind of community, just like the early days of Bitcoin.
So, what are some of your priorities for the next 6 to 12 months as it pertains to your CEO role at Yuma?
It is it is heads down building a team. It's heads down helping to kind of build the infrastructure to make the tensor useful and accessible, connecting sources of capital into the tensor. It's very, very early. This is we're in the formative phase of what the tensor is or what it could be. We're circa 2012, 2013 Bitcoin right now. So there's a lot to do. It's a very the community. It's an organically formed community. Tensor Tau was launched similarly or the same way to Bitcoin, where it was a white paper, and then the code got launched, and then community members started participating. There was no VC rounds, there was no allocation to a team or founders, and so everybody who's involved with Potential right now is in it because they're legitimately excited about the vision of what Potential is. So for us, we have years of work to do at Yuma, and I think we're going to use that DCG playbook and do what we do best, which is help kind of create awareness, help educate, and then connect capital with the entrepreneurs that are building in it.
Is the lack of capital one of the bigger impediments, or
It will be.
yeah?
It will be. It will. Today, there's sufficient capital for what's getting built,
Mhm.
but as these teams are starting to scale and kind of get product market fit for the output of their subnets, they're gonna need capital.
What are some of the applications being built? Is it a lot of sort of um, K Gen AI sort of front end systems, or
There's about almost 100 subnets. There's a new subnet that launches every 2 days, and it's kind of being throttled right now by kind of the way that the system works. And so you have subnets ranging from, you have kind of the traditional kind of, inference. You've got the training, the pre-training, but there's subnets that are doing drug discovery. You have subnets that are doing sports prediction. You have subnets that are doing Bitcoin price prediction. And that's the cool thing about the tensor is this contract can be used to essentially create a competition for anything, and then it provides the incentive mechanism for the crowd to come in and try to outperform everybody else competing to win the reward. So at the end of the day, Bitensor as an application or as a platform, today it's mainly AI related applications, but it really could be expandable into any type of problem you want to solve by tapping into the crowd and having an incentive for the crowd to participate.
what do you think the token cap is important? I feel like a lot of new projects that launch today, similarly to stocks, right, have no sort of cap on issuance.
So I I think it's I think pretty easy to understand that scarcity kind of creates uh, um, uh, um, uh, it's called demand, in that that the issuer or the project owner can't just keep on printing. I mean, that's kind of the government approach to kind of, kind of currency is just keep on printing to incent, kind of economic activity. Whereas with these crypto assets, particularly the ones that are kind of finite in supply, like Bitcoin and Bittensor, is there's value in scarcity, there's value in certainty, and I think one of the reasons why Bittensor and some of these other projects have kind of replicated Bitcoin, the 21 million cap, is because it's now pretty widely understood and it's widely appreciated that that's a feature, not a bug.
Yeah, that makes sense. What looking out broadly across the crypto landscape, what do you think? I mean, obviously you think that this sort of subnet infrastructure is underrated probably.
That's
Um
it's not even no one's heard of this yet. Uh,
what maybe is overrated?
in the crypto space.
Yeah.
So if you measure overrated by market cap, 99.9% of crypto assets are overrated. Yeah, I look at you've got Bitcoin,
Yeah.
and then I think there's a few projects that are generating real usefulness and utility, and everything else is kind of a speculative bet in a casino. And look, that's fine because speculation is a use case and it will spur innovation and experimentation. So I'm totally fine with that. But for the most part, I think most of crypto is overrated, overvalued. Um, but at the end of the day, I think most roads do lead back to Bitcoin and some of these other projects. It's interesting. One of the things, one of the areas that DCG is very active from an investing perspective is in funds. We've invested in upwards of 60 different funds, crypto funds, venture funds, and you would be surprised, maybe you wouldn't be surprised, how few have outperformed Bitcoin and even the broad-based crypto index over the past 5 years.
Well, I think this cycle, more than any other, folks were super underallocated to Bitcoin across the space. I mean, everyone's feeling so much pain unless you're comfy in spot Bitcoin. Especially our friends in the Ethereum ecosystem, which has just been quite brutal. We pour one out for their souls. One thing I have to ask you is the origin of Big Week. What was that? Was like the hottest meme of the cycle.
Yeah. So if I remember correctly, this was in 21. I believe Grayscale was about to announce or roll something out. And a lot of me and other people used to kind of announce the announcement kind of thing.
Yeah, yeah.
And
Well, that's like a crypto meme.
yeah, and so if I remember correctly,
It was probably like maybe a new fund or
it was
something.
something, yeah, exactly.
It was something like kind of like innocuous that like
Yeah, and
became
it wasn't. I mean, I don't make price predictions. I don't do any of that on X. And it was something very innocuous, and then it just so happened to maybe be the week that in that cycle was like kind of the top of the
yeah.
crypto bubble. And I own it.
Do
It's all
you
good.
do you revel in sort of the memery or
Yeah, yeah, but I yearn for the earlier days of kind of crypto Twitter. It was I just the anonymity and the juvenile activity makes it a lot less fun. Like in the early days of kind of crypto, you could have real debates kind of
sure.
and people were not hiding behind kind of avatars. And so I miss that. I mean, X, I mean, it's an amazing platform for getting messages out there and amplification, but it's not a great platform for discourse.
Discourse,
Yeah.
yeah. Um well, thanks so much for taking the time. This was quite the treat. Anything you want to leave the audience with before we send you back to Connecticut?
I think this is an incredibly exciting time in crypto and certainly in the convergence of AI and crypto. And I think there's some interesting projects out there, and I encourage folks
Should we
to
be afraid of AI?
no, no. Mankind figures things out. It's AI is a good thing. It's a force for good. But I think AI done in a decentralized, permissionless way is the right way to do it.
Perfect. Thanks so much for taking the time.